problem with mismanaged and under rent apartment buildings. So obviously it's not the rent or the mismanagement, which I guess it is, right? That's the root cause. But the biggest problem is being able to get a loan on it and leverage it properly, right? So why that's a huge problem is usually lenders, they require a 1.25 DSCR, right? So what a DSCR is, the debt service coverage ratio, right? And what the debt service coverage ratio is the NOI divided by the debt service. So if that number is below a 1.25, they want it to be above a 1.25 in this example, right? Every lender is different, but for this example, let's just say it's 1.25. The problem is that's why you're buying the property, right? And even if you're buying it at a discount, that number could still be really low. And it could be because it's managed terribly, right? And their expenses are just through the roof for no good reason, right? And the other problem is their rents could be literally ridiculously cheap. And that can have something with a lot of owners, like, they're under the thinking that if they just keep the rents like, I don't know, $300 below what they should be, those people will stay forever. And sure, those people will stay forever because who wouldn't want to live in a place that costs $1,000 instead of $1,300 a month, right? But this is even worse than that, right? So that's the hardest thing with buying these properties. Obviously you can buy them in cash, but then you're even more money out. So the way to kind of rectify that is mostly with smaller deals. With bigger deals, you can kind of underwrite it off of the pro forma, and the bank can see the upside, and they're willing to pay a little higher, right? But with smaller deals like this one, the only way to fix it is really to bring more money to the table, right? So you bring a higher down payment, and by bringing a higher down payment, you bring the loan amount down, which brings the monthly payment down, right? So you keep let's just say you keep the NOI the same, but you bring the debt service down. So when you divide that out, you can get closer to that 1.25 or above it. So that's one way to get around it, which sucks. But if the deal is has huge upside, it's worth doing it, right? Because, after a year, I don't know, maybe let's just say you double the value of the building, and having to bring that extra money to the table does make sense because you can either refinance or sell it and get a huge gain. So hope this video made sense, and always remember to keep an eye on that DSCR when you're underwriting stuff, because it's very important, mostly if you're trying to get something financed. So hope you have a great day.